How to recognize noise and concentrate on what really influences the market. Jim Martens, one of the speakers invited to the annual Forex conference in Moscow, is sure that the Elliott wave principle will help tackle this difficult task. The veteran of the wave principle and Robert Prechter's follower agreed to answer our tricky questions.
Hello Jim, nice to meet you here at the annual Forex conference in Moscow. First off, I suppose we cannot avoid the traditional question about the reasons that brought you, why you became a Forex strategist, and the chain of events in your life that brought you to the Forex market. Why did you decide to switch over currencies after years of a fruitful work on commodities?
Right. Well, I started following actually financial instruments like stock equity prices in the States. I just always had an interest in that. So I became an expert, I think, in the Elliott wave principle, which allows me to move from one asset class to another. So from stocks to metals, I worked on the exchange floor in metals, to working at Elliott Wave International, where I've covered probably almost every market around the world. Now I do specialize in currencies, but I could look at a chart of the Dow Jones Industrial Average if I wanted to and have an idea of where that market's going.
So you are one of the luckiest strategists blessed with the chance to work on a team led by Robert Prechter, the guru of technical analysis and a widely recognized authority of Elliott wave theory. Tell us please, what is it like to work with such renowned specialists, and what brought you two together?
Well, Bob actually is the one who got me interested in the wave principle, seeing him on TV in interviews in the 80s. And just his work made sense to me. The way he talked about the markets, the way he viewed the markets, made all the sense in the world to me. So that's why I've dedicated 30 years just to using that one methodology. And once I went to work for him, of course, I have access to him every day with any question I would have. So for many years, that's what I did. Every day I would talk to Bob, I'd ask his opinion of markets. So I've gained a lot of his experience as well as my own experience. So I'm not going to say, I use a lot of what he has taught me, has brought me to this point in my career where I can look at almost any market and have an idea pretty quickly of where it's going. So it was extremely fortunate that I met him and was invited to join Elliott Wave International. So that would be probably the highlight of my career so far.
Fine. So about Elliott wave theory, a lot of experts believe that Elliott wave system is perfect for Forex newbies. Do you share this opinion, and how do you think, what advantages does Elliott wave offer to Forex traders?
Well, the first advantage it offers is that if you use it correctly, or at least the way I think it should be used, you know where you're wrong. So if you turn, say, bullish a market, you believe it's going to rally. If it goes below a predefined level, you know you're wrong. So I like to protect my capital before I do anything. I worry more about losses than I do about my gains. The goal is to make money, of course, but to make money, I have to have money in my account to continue trading. So I limit my risk. And the wave principle does that very well. Now, in regards if it's the perfect model for everyone to use, I think it is. I found it, I've read the books, I've read the material. It agreed with the way I already thought. It made perfect sense to me. I don't understand why it doesn't make sense to everyone, but that goes to the point that everyone has to find a method that they're comfortable with, that they believe in. If you don't believe in a method, then you'll continue to change methodologies, and I've seen that many times over my career with people that I know. So unlike myself, have stayed with one method, they've jumped around. If they're proven wrong, it's not their fault, it's not their decision making, it's the method. They move to a new method. as opposed to the wave principle. While I will be wrong sometimes, I know when I'm wrong, and I know to move to another market and look for another opportunity to be disciplined. So I would encourage everyone to read about the wave principle, to try to understand it. If it makes sense to them, then they should really take the time to learn it thoroughly.
So, buy the rumor, sell the news. Has become extremely popular market adage cited by traders. How often do you use this phrase yourself, if at all? And do you believe in this principle?
Well, first of all, I don't believe that what you read in the press will guide you correctly in the markets. I'm a contrarian at heart, and the wave principle, for the most part, is a contrarian theory. When the press loves a trend, they love a market and the trend that it's in, that means that trend is likely to an end. Not long ago, with crude oil at $150 a barrel, we were going to run out of crude oil. Now crude oil is below $50 a barrel. It had reached an extreme. So I use the press for that. When it reaches an extreme and you see magazine cover articles about financial instruments, that gives you an idea that you should probably be thinking differently. So that's how I use the press. So I pay very little attention to what they say or the reasons they say it. It's just that if they give a lot of coverage to one market and a lot of extreme coverage, then I'm thinking that that's the signal to start looking for a trend change.
According to your market philosophy, a change's intent direction is driven purely by psychological factors, but recent days is practically impossible to abstract away from the actions of some central banks. Primary focus is on the timing of the first interest rate hike by the US Federal Reserve. The Fed Chair Janet Yellen in her statement expressed confident that monetary tightening will start before the end of this year. Across the Atlantic, ECB maintains its ultra-soft policy. But despite the differences between these two stances and the forecast for Euro-USD parity, the single currency remains quite strong and relatively confident until now. What direction see you for the Euro-USD pair? What do Elliott wave suggest?
Well, looking at the charts, which is what I do, it looks like euro-dollar will continue lower. Now, what effect the Fed policy might have, or ECB policy, I believe it's the market that will determine what decisions they make. That the market is the driving force, and the market is driven by the emotions of the crowd. So in the US, they were talking about a rate hike in September. And as that time approached, our stock market declined, and all of a sudden, there would be no rate hike. So that's an example of the market making the decision of whether rates should be raised or not, instead of Janet Yellen or the Fed. I think you'll see the same thing from the ECB. Now they're talking about continuing QE, and will the Fed raise rates if Europe thinks that lower rates are needed to drive their economy? And I would think they probably won't. So I have my doubts about the Fed raising rates by the end of the year, regardless of what they're saying. I think they'll, again, as that meeting in December approaches, they'll just listen to the market and make that decision. And as an example of what drives markets, you could look to the Chinese yuan not long ago. Their central bank had to make a decision and devalue their currency when most were not really expecting it. But looking at the charts, we expected a big move in the dollar higher versus their currency. So we foresaw the move. I didn't know why or what would cause the move, and I would argue that it wasn't a devaluation. The market dictated that they needed to devalue. And if we went back a couple of years, we look at, say, the Swiss franc, the dollar versus the Swiss franc for the same thing. They had pegged their currency to the euro for a long time, but market forces dictated that they needed to decouple. So again, it's the market that determines Fed policy. I'm sure they would like to believe they move markets and control the markets, but I would disagree with that conclusion.
being here at the conference of InstaForex held in the capital of Russia, we cannot but ask your opinion about the prospects of Russian ruble. How do you think, how will investors react to the foreign policy development, especially Russia's military auctions in Syria? Will market participants perceive Russia as the strong and confident player on geopolitical arena that can protect its interests, and if so, it will attract investment flows into Russian economy and boost the demand for Russian currency? How do you think?
Well, the charts tell me that the US dollar is going to continue to rally relative to the euro. The ruble has recovered from its recent, the big move, the big decline it had a couple of years ago. But the way that it rebounded was corrective. So I think the US dollar will move to a new high relative to the ruble. Now, I think that would occur regardless of what news is out there geopolitically, because you could talk about the actions in Syria or the Ukraine or anything that the US gets involved in, but that might not be the most important story of the day that captures traders' emotions. Maybe it's the price of oil. So both countries are very dependent on oil. Russia is an exporter. So the price of oil being depressed might be more important at this point in time than any military action anywhere else in the world. And that's the basis for what the Elliott principle is. It's taking the emotions of the crowd and putting it onto the chart to reflect what the market's doing, because that emotion is what drives price. So traders will determine what's most important going on in the world today. Is it oil prices? Is it military action? So it's hard to say. There's plenty of influences occurring at any one time. So just to look at one thing like military actions, I think is too simplistic.
Many thanks for your answers.
We sincerely thank Mr. Martens for such interesting answers and inspiration to study the wave principle.